In the month of May, we saw mortgage interest rates go up, we saw inflation go up, we saw the stock market go down, and as a result, we saw some buyer nervousness start to creep up a bit. We saw more rumors and headlines saying, hey, maybe this is the big market crash we've been warning you about since 2020, for those who are always marketing fear. So, what does the actual data in Portland say? Do the numbers suggest that we're headed for a big crash, just a slowdown, or are things still picking up? Well, let's take a look. It's no secret that one of the things really driving the market over the last couple of years has been a housing shortage. But let's always bear in mind that housing shortage is sort of a misnomer in the sense that it's really just a function of the demand for houses to buy versus the supply of houses for sale. You can keep the amount of homes available in any area the exact same, and over time, supply and demand ratios change. So sometimes you have a shortage of inventory, another time you might have a surplus of inventory, even with the same number of houses. So when we say housing shortage, it's always just relative to current supply and demand. And one way that you might close that gap between demand and supply, given that this is our ratio right now, is to simply increase the number of houses that come up for sale. Well, did that happen in the month of May? Yes and no. From April to May, we did see a 4.5% increase in the number of houses hitting the marketplace, which sounds like good news, and it is. But remember, we tend to see the number of houses hitting the market for sale go up throughout the spring. This is typical seasonality. March, April, May, into June, July, when we'll start to sort of cap out in the heat of the summer, so to speak. But what about this year versus last year? Well, the number of houses hitting the market this May versus last May is actually down 3%. Now, that's not a big drop because the thing is, in 2021, we actually had a good number of houses going up for sale. It's just that they sold so stinking fast because there were so many people wanting to buy. So a 3% drop in the number of houses coming up for sale isn't necessarily a sign that we're going to have the same level of shortage and the same supply-demand problem that we've had, because we've always had a decent number of houses hitting the market. How about closed sales? Well, in the month of May, we saw nearly a 5% increase in the number of closed sales versus April. But again, a lot of that's probably explainable via seasonality. Those sales went pending back in March and April to close in May, and we tend to see an increase in the number of pending sales that later close in those spring months. So a 5% increase, again, March's seasonality. It might have been aided by a general trend of increased sales when interest rates first start to go up, because some buyers will get a bit more aggressive as interest rates start to rise because they recognize that paying a little extra now is better than waiting and paying the same amount with an even higher interest rate later. Year over year, though, in May, we saw about an 8.5% decrease in the number of closed sales. So while yes, seasonally this year we're seeing a typical increase, the number of sales is actually down versus last year. Now, a couple things to consider. Again, 2021, we had high demand and an above average number of sales. So a decrease in the number of sales right now shouldn't be reason for panic. Because first of all, the number is always going to go up or go down. It doesn't say stagnant. And as high as it's been over the last couple of years, it's not a surprise to see it go down. Now, certainly we're going to keep an eye on this and see, does it continue to drop year over year and how much? Because that can start to say what's going on with demand in the area, which can later, yes, of course, impact pricing and so forth. But right now, an 8% decrease in closed sales year over year may or may not really be a sign of a big change, but it is at least something to keep an eye on. Where things might get most interesting in trying to measure where the market's headed right now is in pending sales. Because for the month of May, what we want to look at is how many buyers and sellers came together, because that's the most current measure of demand. Month over month, April to May, the number of pending sales went up about 4%, which again, not a surprise. Seasonality probably explains most of that. But the number of new pendings last month was down 16% versus last year. That's the biggest sign that we are seeing a bit of that decrease in demand. And that could be that, as we said, more buyers might get aggressive when interest rates start to go up. Well, in the month of May, they got up into the mid-5s in many cases, which is nearly double what they were just 3 to 6 months ago. So you might see more buyers starting to pull back a little and say, hey, maybe I'm going to wait and see. Are rates going to flatten out? Is it possible they'll come back down a little bit? Is this the big drop I've I've heard about, maybe been warned about. So some buyers might pump the brakes just a little bit. And of course, some buyers in the lower ends of the price point got priced out when interest rates shot up. So seeing a 16% drop in pending sales is definitely noteworthy. And it'll be something we'll be watching next month as well to see, okay, does this trend continue? It probably won't continue to drop that much. Although year over year, again, it's not a big surprise given that last year we had a lot of pending sales. So 16% is quite a bit, but it's down 16% from a higher than normal number. So in a sense, if you average it out, we're not down as much, but we are still down, and it is a sign that demand is starting to ease a little bit. One place you might be surprised is to find out, in the midst of all of this, what's happened to the amount of time houses are on the market. Well, that number is down 14% in May versus April. And interestingly, it's down 19% versus last year, which doesn't sort of add up, but it might mean that in some cases sellers are making decisions a little faster this year than last year, given rumors that maybe things are starting to ease up. Sellers might not kind of drag things out if they get a couple offers in now. They might feel like, hey, we're going to respond to them instead of trying to pull this out a little bit longer. So even with measures or indications that demand is down a little bit, houses are selling faster, which normally is a contradiction. Well, how does all of this show up in terms of inventory measurements? Remember, in our industry, housing inventory is measured in time. So it's the number of months it would take to sell off all the inventory of homes for sale at the current pace of sales if nothing new came onto the market. Well, from April to May, we actually saw about a 25% increase in that number. But of course, bear in mind, it was from 0.8 months to 1 full month. So, okay, we're still only at 1 month of inventory, but that is still a bit of a jump. And I'm going to predict that we're going to see that number maybe get up to about 1.4 to 1.6 months next month, just given the decreased number in pending sales versus the smaller decrease in the number of houses hitting the marketplace. So right now, the inventory number is really low. We should expect to see that pick up. Now, will it get up to the 6 months figure, which is sort of the magical figure that agents have used historically to say, hey, at 6 months, it's equally buyer favorable and seller favorable? No, I don't think we're going to get up to 6, especially anytime soon. But I think we could start to get up toward 2 months pretty quickly, which is, again, actually a good thing and a healthy sign for the market. Now, the last thing to consider, of course, is what about pricing? The typical residential property, be it condo, townhome, detached house, etc., sold for $575,000 last month. And it's up nearly 12% versus May of last year. That's still strong. So even as we're seeing supply and demand ratios start to shift a bit, we're not seeing it show up in pricing. And I'm confident that as you go through the summer, that appreciation rate of 11.7% is going to come down, but it's not going to dip into the negative anytime soon. And I don't see it dipping into the negative anytime this year, despite some of the more excitable reports you might see online. So to summarize, in the month of May, the number of houses coming up for sale is down from last year. The number of pending sales is down quite a bit from last year, and the number of closed sales is down a bit as well. But last year saw higher than normal figures. So if we take the numbers from this year and look back at 2018, 2019, it's actually much more consistent than you might think when we compare it to pre-pandemic figures, which we'll talk about next time. If you have any specific questions about your home and where things are right now, what the market looks like for a property like yours in your area, shoot us a message and we'll get that information over to you right away. And if you're thinking long term, or at least in the near long term, say 6 months on into the end of 2023, and you're curious about what the projections are, again, reach out and we'll let you know what we see coming for the next 6 months and on to the next year and a half, so you'll at least have some reasonable predictions as you kind of weigh out your options going forward. We look forward to hearing from you, and thanks for tuning in.